Welcome back to another episode of FPOG, Financial Planning for Oil and Gas Professionals. This week on the podcast, we're going to do a lightning round where we take 3 topics, digest them, talk about them 10 minutes or less. And I will say, 2 of the topics that we're talking about this week were listener questions. So if you have questions you want us to answer, shoot us an email, podcast@brownleewealthmanagement.com. Justin, I'm excited because it's been a while since you and I have had a podcast together. I feel like between interviews, welcoming new team members, hasn't been you and I. So it's good to be back in the saddle. And 2, I love answering listener questions.
Yeah, it really is fun. I love these lightning round episodes. I think, Jared, we should make this a weekly tradition. So keep the standard podcast episodes going every other week. And I think we should do a lightning round in the off weeks. And I always love lightning rounds too, because Jared, you say 10 minutes or less. And I immediately feel that, hey, I'll take that as a challenge. I think we're going to go over 10 minutes on some of these. And so this should be a great lineup of topics.
Awesome. And I'm 2 minutes into the podcast and I haven't even introduced what we're talking about. So the 3 topics are, when do you use a Roth IRA? The second topic, do financial planners have financial planners? And should they? And then the final topic, we're going to talk about Chipotle, the stock, just riff on it, talk about the business a little bit, what's happening, what we think about it. So, Justin, when should somebody use a Roth IRA, right? Because if you've listened to a lot of our podcasts, we're very pro Roth IRA. We're big pro tax diversification, having a tax-free bucket. And it's a really awesome asset to inherit. So it's a great legacy asset. But we got a good question of, okay, I do these conversions and I pay all this tax. When do I get to take advantage of the Roth IRA?
It really is a conundrum. We are so pro Roth IRA. I mean, with every family we work with, we want to really thoughtfully have a multi-decade plan to wake up in 20 years with more Roth assets than we have today. So, I mean, Jared, saying that we are pro Roth IRA is an understatement. We love it. But the funny thing is, gosh, for how much we love Roth IRAs, we basically are adamant that you should never spend it. And so I love this question. It is such a good question. At what point is it okay to spend a Roth IRA? Maybe a quick 30-second stop there. The reason that we tilt towards never spending Roth, you touched on this, Jared. They inherit so well. So a Roth IRA passes down to the next generation, and it passes down tax-free. And that may be kind of an obvious statement because a Roth is inherently a tax-free account, or should be, as long as you follow some of the very easy tenets that the IRS puts along with Roth IRAs. But it's not always a given. Jared, we know this, but HSA accounts are not necessarily accounts that you want to pass down. So HSA accounts are the most tax-advantaged account in America. There is no better account technically to get greater tax benefits, and it includes tax-free growth, right? But an HSA isn't necessarily an account that you want to pass down. Instead, it's really a pretty good idea to make sure that as you're in your mid-70s and beyond, that you're spending it down and maybe emptying out the HSA. But the Roth IRA, it's a beautiful account to just let it compound forever and go to the next generation tax-free. So then the question becomes, I get that. And, textbook-wise, it makes sense. The idea is pretty simple, that tax-free growth is best done over a longer period rather than a shorter period. Therefore, if you're going to spend money today, if you're going to spend money in 10 years, it is probably in your best interest. It behooves you to not spend the Roth money and spend any other bucket. So when can we spend Roth? It's tricky. I'm going to give out one idea and then I want you to kind of give your thoughts. I do think it can make a lot of sense if you're 75 years old and you find yourself in a year where you're not doing any charitable giving, so there's no qualified charitable distribution. And maybe it makes sense in that scenario where you've got a set amount of taxable income that's coming in you need a little bit more money, but you don't want to increase your taxable income any more because you're going to be on the edge of Medicare premium increases. So, Jared, I think one use case for spending Roth IRA money while you're living is as kind of a backstop for expenses that are not going to, produce any taxable income so that you lower Medicare premiums. What are your thoughts on that?
Love it. Yeah. Medicare premiums are a cliff, right? If you think about our tax rate in general, it's marginal. So if you go over a bracket into the next bracket, only that portion of income is taxable at that new increase rate. With Medicare brackets, it's all or nothing. So if you convert one more dollar to get you in the next bracket, you could pay hundreds or thousands of dollars more in Medicare premiums just by realizing that one additional dollar of income. And so I think Medicare premiums are a great opportunity. Justin, I think you touched on something important I think, like the financially optimal answer is never, right, with the Roth IRA. But like the lived experience is very different, right? And so if you're in an abnormally high income tax year, I think another good example would be, hey, if you did a really aggressive Roth conversion, let's say you get a 40% bear market and you get excited about moving over, accelerating the conversion, regardless of tax. Hey, I can convert a lot more, in terms of number of shares of my security because of the temporarily depressed prices. If you accelerate some Roth conversion planning and you're in a really high bracket, maybe you live off of the Roth to kind of manage that potentially. So that could be another scenario where, hey, I'm really aggressively kind of funding that. But man, I think there's some life optimal considerations, even though I would say most of the time the textbook answer is it's better to just have it be a legacy asset.
I think we could maybe think of scenarios too where family giving could be a reason to do it. So, let's give a hypothetical. You could be in a situation where maybe you have between pre-tax IRA and Roth IRA assets, maybe there's 5 million there. And 4 million's in pre-tax IRA, 1 million is in Roth IRA. That's kind of a pretty normal standard breakdown for someone who retired 5 years ago and they've already done some Roth conversions. So in that scenario, you could be in a situation where you're taking income from the pre-tax bucket primarily. And if you're, let's say 73, well, you're definitely doing that for required minimum distributions. You don't have a choice. You have to take that income from the pre-tax IRA. But then you're sitting there thinking, hey, my house is paid off. I'm taking all the vacations I want to take. I've got enough money. Why don't I go ahead and help my 2 or 3 or 4, however many adult children out? I want to set them up for success. They're trying to buy a house, or, maybe you want to retire one of the spouses to, be a stay-at-home parent. Any myriad of things. Every 27-year-old today or 31-year-old, I'm sure, could greatly appreciate an $18,000 annual exclusion gift from a parent. So in that scenario, you don't really want to take any more from the pre-tax IRA. You've already paid your income tax. That's already happening with your required minimum distribution. Jared, I could come up with a case that says, okay, just take it out of the Roth IRA. You followed all the rules, assuming with Roth accounts. Just take it out of the Roth IRA and let that be the source of giving. Is it the financially spreadsheet optimal decision over a 50-year period? No. I mean, the optimal decision on a spreadsheet is going to be let it sit in a Roth IRA, for 50 years, well after you're gone. Pause. You're not allowed to do that, but let it sit in a Roth IRA for as long as you can for the rest of your life. So, Jared, what do you think about that? Maybe you acknowledge it's not the 50-year optimal decision, but you want to do some family gifting. And your child at 28 probably has a way bigger use for money today than they will at 61, when hopefully, you're not passing away until they're already retired.
Yeah, I think, right, like accelerating legacy. Like if you think about it, we talked about the Roth IRA as a legacy asset, right? And if we can accelerate the legacy planning and giving, and we're big proponents of, beginning to give earlier and starting the conversation sooner so you get to see, the fruits of the gift. So, if by using a tax-free bucket empowers you and makes you feel more excited about giving, I emphatically think that's a good use of capital. I think one other potential use case when Roth IRAs could make a lot of sense as a source of funds is really close to end of life. If thinking about Texas being a community property state where the property gets a step up in basis, right? Like if you have a terminal illness and the way you're creating income for your end of life care is by realizing a lot of capital gains on assets with a large embedded gain. Those could be, it might be better to, hey, I'm going to take from the Roth IRA, knowing that whenever I do pass away, that whoever inherits these assets is going to get a step up in basis.
That's an incredible point. That actually is a hypothetical example where it is the best idea to spend the Roth.
Yeah. So there are use cases, they are minimal, but again, right, a spreadsheet would also tell you that taking the vacations is not financially optimal. So, I think if there's Medicare cliffs or if, there's potential capital gains, there's a reset in cost basis related to capital gains, or it just, mental accounting is a valuable thing. Or if it's a bucket of money that you're okay with splurging on because you don't have to create, there's no tax liability to using it, right? I think that's beneficial. And we see a lot of people who have been diligent savers and have trouble spending. So I think, if this bucket of money helps you feel empowered and encouraged to spend on the things that make life worth living, I think that's a great use of the money, even though it's not the spreadsheet optimal answer.
That's right. And kind of a principle I feel like I've been really learning over the last 6 months. I mean, it's only applicable if you've kind of reached financial freedom. But in many ways, a life well lived is far more centered around spending money than it is saving, investing, and compounding money. And I firmly believe that it is a noble thing to wisely steward the money you have and to compound your wealth. I think that is a legitimately noble endeavor. But I also am growing. This idea is growing on me. And it's kind of, we need to read that book and do a book review, Jared, but Die with Zero. But there is an element where, hey, a life well lived is, a lot of it comes down to how you spend your money. And so, yeah, it's okay to not do the financially optimal thing all the time.
Love it. Awesome. Let's move on to the next topic. Do financial planners have financial planners? If so, kind of why or why not? Justin, you want to tackle that?
Jared is my financial planner. And so I do feel like there is an element where we're in a position where, hey, we've got multiple partners. And so that can happen a little bit. And so I will legitimately talk through different scenarios between buying a house, investing, or different things. And, I've got people within our roof that, I can bounce ideas off of figuratively. So that's my initial answer. Jared, I do think there's a ton of merits to a financial planner having a financial planner. I'm interested to see what else you think.
Yeah. So I would say, I would kind of rephrase this question and do wealth managers have wealth managers? And there's really two, if you think about financial planning is if you think about wealth management, there's two pieces. There's financial planning. There's okay, looking under the hood of your balance sheet, kind of optimizing that. And then there's asset management that's okay, actually managing the money. And so I'll kind of bifurcate those and then we'll tackle each of those individually. So on the asset management side, employees of the firm are encouraged, not required, to have their assets managed by the firm. And so I think that's an important idea, the idea of eating your own cooking, right? If we have conviction in the investments we're recommending to our clients and our portfolios are structured similarly, right? I think there's a big moral hazard if what I'm recommending for you is not, in fact, what I'm doing for myself. So I think on the asset management side, of course, employees aren't required. Nearly everybody has opted in because, we have conviction on our investment philosophy, right? And as fiduciaries, we put stuff we put our clients in investments that we would want ourselves. And so we therefore want those investments ourselves. So on the asset management side, I would say, hey, we utilize the firm approach, really lean on the company. Financial planning, it's kind of interesting, Justin, because like on the one sense, you're exactly right. Like we lean on each other. We have CFP professionals on staff and we all have blind spots, right? So, we've also made it known to employees that we are available to answer questions. Hey, how much life insurance should I buy? Hey, do I need to up my disability policy? How do my estate planning documents look? These are all questions that we've gotten asked or asked ourselves to competent people on staff. And so I think having that resource is really helpful. I am interested and open to the idea that longer term, I think maybe I could see some of our employees outgrowing us for the financial planning aspect, still hopefully philosophically aligned and really interested in the asset management piece. But I could see them maybe going elsewhere for financial planning, which wouldn't hurt my feelings at all, right? Because if you think about who we are best positioned to serve, it's an oil and gas retiree from a super major or executive at a small publicly traded oil and gas company or somebody with minerals or private
privately
stock
held oil
in an oil and gas company,
yeah.
right? And so I realized that we are not, our employees are not that, right? And so there's some overlap because, if you're a partner, there's a high percentage of net worth concentration in a business. So there is some overlap. It's not, completely different, but I realize, there's limitations in that. So I would hope that, the employees and our financial planners continue to use us for asset management and lean on that and have conviction in those strategies, but and to lean on us for financial planning questions. But I also do realize that there might be a point at which they outgrow us, or they might want to find somebody on the financial planning side more suitable to their needs. But we'll be a resource and a sounding board till that happens.
Jared, I love that you brought up the asset management point. Wall Street Journal has done an extensive number of articles that are all, how do you hire a financial advisor? And one of the questions they think any prospective financial advisor should be asked is, who manages your money? How do you invest? It would be pretty disingenuous to get on this podcast, talk about the merits of low-cost passive global diversification, introducing alternative investments when assets hit a certain size, and having a very methodical textbook approach to investing. And then if I were, over here just shorting Chipotle stock with everything I have, or doing something that is just wildly different. And Jared, I guess the real hiccup that actually gets, people and the reason why Wall Street Journal tells you to ask this question, it's not so much that. It's not so much, hey, an evidence-based asset manager is over there doing something really wild, doing, shorts or something like that. It's more so, hey, this advisor is telling you to, maybe it's 20 years ago, buy an MLP. Or this annuity, this life insurance policy. And that was actually what was kind of undercover found in some of those Wall Street Journal articles. They would go to financial advisors in quotations that basically just sold insurance policies or annuities. And they would ask them anonymously off the record, how do you invest your money? And they all answered index funds. But they would make their money by selling really expensive life insurance annuity products. So that really is such an important point. It's a good thing, to make sure that your advisor is managing their money in the same way that your money is invested. There shouldn't be a difference there.
Totally. So I would say, to answer the question really specifically, should financial planners have financial planners? Yes. And I think advisors should eat their own cooking. And whether or not the person's advisor is somebody at the firm or somebody outside of the firm, I think it's a good best practice because we all have emotional blind spots. And money is very emotional, and we have biases and dispositions and certain points of views and ways we see the world, where I think having somebody just as a sounding board that isn't you and that sees the world differently and that is technically competent to potentially uncover stuff you might not be thinking about is a valuable thing.
That's well put. Well, should we talk about Chipotle, Jared?
Yes. Justin, I'd love for you to frame for our listeners why we are talking about Chipotle today.
We're talking about Chipotle today because I sent a message to the entire team, and the message said, hey guys, I think that we should start talking about 1 to 2 stocks in every lightning podcast episode. And I think it would be really fun. I think we would enjoy talking about it. I think listeners will enjoy it. And I think we can dive into, hey, what's happening with this individual stock? How does that compare to its index? And what can we, as long-term passive investors who do not pick individual stocks, what can we learn? What can we gather from this exercise? And so that's why we're doing it. I thought it'd be fun to start with Chipotle because, Jared, do you know what Chipotle has done performance-wise recently?
I do, because you made me look it up before we started. But tell me, Justin.
Chipotle is up 53% over the last year. Chipotle is up 340%, I believe, over the last 5 years. That is tremendously better than what the S&P 500 has done. Second question, Jared, do you eat at Chipotle?
Sometimes. And Justin, I would say I would use the sometimes as like the phrasing when I'm in a jam, right? Like it's never at the top of the list. It's like, oh, my favorite spot is closed, or we're on the way home and it's the frictionless option, or I'm on a road trip and it's Chipotle or a bunch of other spots that are even less compelling. So like I eat at Chipotle, but I would say a little bit begrudgingly and when I'm in a jam. What about you?
I loved Chipotle when I was in like junior high. I think I was in 6th grade when the first Chipotle opened in Lawrence, Kansas. So that was the first Chipotle in Kansas, not the first Chipotle anywhere. And ate there for the first time, just thought these massive burritos are one of the greatest innovations that mankind has come up with. What an incredible product. And I mean, I would say that for the first 10 years, so this is like, I don't know, 2002 to 2012. I would say for that decade, in that time frame, I loved Chipotle. It was just incredible. I do think at some point in the last 10 years, Chipotle quality fell off a cliff. Now I say that, Jared, what's their special chicken that they've come out with recently?
I don't know.
Well, I should have looked this up beforehand, but they're spicy chicken al pastor, chicken al pastor. It's actually very good. It's won me back a little bit, so I've gone multiple times recently, and I've really enjoyed it. But Jared, I saw a tweet just 2 weeks ago that says, "Has there ever been a bigger quality drop than what we've seen from Chipotle in the last 5 years?" And so, pretty incredible that, I mean, and I've had this conversation with several folks that it just feels like, man, I used to love Chipotle. And it's just not the same. The consistency is not the same. If you look on Apple Maps at any Chipotle, if you're listening to this, I would challenge you, look up Chipotle in the entire Houston area, DFW, wherever you are. I am guessing that the public reviews of any Chipotle that you look at are probably going to be around 2.5 out of 5. So these are pretty terrible ratings, right? If I'm looking at a restaurant and I see 2.5 out of 5 with 100 reviews, I would never go to that place, but I still go to Chipotle. And so what in the world is going on that there seems to be some sort of trend, that there's massive disapproval of Chipotle's consistency, of their quality in recent years? Jared, how is the stock absolutely torching its index and outperforming?
I mean, I think this is a test. Like, I don't know. I would kind of challenge. There's I don't know if it's a Buffett quote or who it is, but talks about like buying what you know. And it's like, it's really kind of turns that idea on its head of like, I think what's happening is if you look at the chart, net income at Chipotle is higher than it's ever been, right? Which is great. Like, and the quality compromises have also probably improved margins, right? We're eating food that is the same food, but there's a higher profit margin, right? So they are taking quality shortcuts, right? And so I think there's like a really valuable lesson in there in terms of like what Wall Street rewards is beating of expectations in the short term,
Ooh,
right? Like
that's good.
it doesn't reward making strategic investment for the long term, right? So like the lived experience is brutal and the stock is just going up, right? So I think it's just an expectations time horizon mismatch, right? They're not thinking about what this is doing to the brand and the relationship between customers and the business long term. They are just juicing it, and Wall Street's loving it. And so I think that's part of it. What would you say, Justin?
I think that's such a good point. A stock is priced based on their performance relative to expectations. And so it is not based on performance. It is performance relative to expectations. So Chipotle has had an incredible run in the short term because all of their quarterly earnings have been better than Wall Street expected, and just the price is exploding. Now, it is interesting to say, hey, what are Chipotle's cash flows actually worth? And another question, what are Chipotle's earnings actually worth? And Jared, it's easy to think that Chipotle is pretty overvalued right now. What did you say? Would you say it was like a 67 PE ratio?
Yeah, which is insane. That's like technology company status, right? Like I think Apple has a lower price to earnings ratio, right?
Yeah, I mean, if you would have told me that Chipotle is selling at 67, perfect analogy. That is a tech stock. I mean, you would have thought that they're selling burritos on the blockchain or something. None of that makes sense. But it's just fascinating that, a brand isn't necessarily tied to a stock price. There can be a discrepancy here. Jared, I just got lunch today. Have I ever taken you to Enchilada Ole in Fort Worth?
Oh yeah, best queso around.
Yes, thank you. It is the best queso in the world. And I'm not saying this, I'm saying this as someone who has lived in Texas for more than a decade. So I'm not some random clown giving out queso awards like they're participation trophies. This is world-class queso. It's the best queso in the world. Jared, I ordered it for lunch today, and you won't believe it, but there was a small piece of plastic in the queso. And what's interesting, and I thought about this, and here's the thing, I wasn't even mad. I'm not even going to call them. I'm not going to do anything about it. And guess what? I'm going to go to Enchilada Ole as soon as I can again. I will probably eat there within the next week because the goodwill that this restaurant has built up with me is endless. I think this is one of my 3 favorite restaurants in the world. It is absolutely incredible. It is so good. And they messed up once. So I don't really care. I'm not worried about it. In fact, I'm inclined to almost wonder, maybe I'm the one who has it wrong. Maybe plastic is supposed to be in queso. Maybe it should be part of the core everyday diet. That's how much faith I have in this restaurant. But you think about that, if that same experience happened to me with a Chipotle burrito bowl, I would be so mad. I would be so mad at Chipotle. So interesting how you can have those reactions, and customer loyalty. It really depends. You can lose significant customer loyalty with too many negative experiences, and that seems to be what's happened at Chipotle. But the financials are just absolutely beautiful, and so the stock price has done extraordinarily well.
Yeah. And I think it's like a testament to how hard picking stocks is, right? Because like if you were to do a ton of like bottom up due diligence, grassroots, ask customers, build a fancy algorithm that tells you number of negative ratings or positive ratings, you might come to a very bearish conclusion about this company.
Yes.
And it is trounced the S&P year to date. And the performance has been absolutely stellar. So it's just another testament of, man, picking stocks is so hard. Justin, I don't know how we celebrate, 10,000 listeners, or I don't know what, interval we do this, but if we ever get merch for the podcast, burritos on the blockchain has got to be, got to be the slogan, got to be on the merch.
That might be it. But it's just unbelievable. It's absolutely fascinating how much Chipotle is crushing it. I mean, Jared, I'm not even sure what the total market capitalization of Chipotle is right now, but if you had that amount of money, guess what? I'm sure not buying Chipotle as a business. I'm not bullish on it relative to other businesses over the next 10 years. So really interesting to see what they've been able to pull off with their stock price.
Yeah. And I mean, like, that's the thing is like, where does it go from here? How much of that is priced in, right? And does it have
Bingo.
legs to continue to perform how it's performed? Probably not. Aswat Damodaran publishes price to earnings by sector. And if you look at the whole semiconductor sector, it's a price to earnings ratio of 50, or it was at the beginning of the year.
For semiconductors,
right? And NVIDIA is probably dragging that up a
burritos.
little bit. But that tells you how frothy the sentiment is around this company. And right, like this is not, this is not buy or sell advice. This is just us riffing on a stock, just talking about how hard picking stocks is and how wrong you could be for how long, right? If you would have done the due diligence, Chipotle's quality has been falling off for years, but the stock's been performing great, outperforming the S&P for years, right? So even if you got the investment, like if you're bearish on the stock, which rightfully so, you're going to have to lose money for a long time before the market works itself out and the long-term implications of what's being done come to bear on the price of the stock.
That's a really great point. It's easy to think about this. And Jared, I would say that the next 4 years of burrito sales are basically already baked into that current stock price. It's easy to come to that conclusion. With that being said, I'm not shorting Chipotle stock because I don't short anything. And so humility as a core investment principle must be adopted. With Enchiladas Ole's queso, it really is tremendous. A piece of plastic is probably an exaggeration. It was clearly some sort of a wrapper paper from one of the products fell in. But want to make sure that the greatest, Tex-Mex restaurant in Fort Worth, want to make sure that all of our listeners understand that it truly is legendary.
Awesome. Well, already walking back the accusations, just a testament to how far goodwill can take you and how quick people can turn on you if you start cutting corners and people become privy to it. So, Justin, I think that's a good place to wrap it up. So if you have a company you would like for us to dissect on the next podcast or ideas for future episodes, always love to hear from our listeners. Podcast@brownleewealthmanagement.com. Thanks. We'll see you next time.